do have another time to do business on Business Incorporated. It's 25 minutes we have, and this is what we've prepared for you. GDP is up in Egypt 5%. We'll give you the details and the trend. Things looking good in Zimbabwe. GDP rebasing and better numbers. Not so good in South Africa. The PPI is up. You're welcome to the program. I'm Ini John Mekwa, and we start from the global oil space where prices erased wartime gains today. Investors bet global crude supplies would improve after tankers that had been stranded in the Persian Gulf for months began leaving the Strait of Hormuz. International benchmark crude, we see, lost 1.44%, and it's now at $72.68 a barrel. WTI also lost more than 1%, $69.51 a barrel, and we see that this is numbers last seen before the Middle East war broke out in late February. More than 20 tankers have gone through the Strait of Hormuz today, and the non-Iranian vessels had been stranded in the Persian Gulf for months. And of course, that's affecting what's going on with gas. But we see gas has revised the color. We had seen a drop, but now we see that it had lost 1.89%. That's talking about natural gas, and is now on the climbing trend at this time. $3.28 is the price for natural gas after it went down 1.89%. And then we move on to what's going on in metals. Prices steady today. I lingered near a more than 7-month low that it touched in the previous session. Expectations of U.S. interest rates, that is still on the mind of a lot of investors, and it's affecting the price of metals. So spot gold lost 0.16% at just about $4,000. Spot silver more than 1% down, $57.47. Platinum 0.19% in the red, $1,585.60. Palladium and copper, however, on the flip side, we'll see both of them gaining 0.86% and 1.49% respectively. And we see copper, very interesting there, is now at about $6.03. Let's come to Nigeria now, and it's a very important message from the Central Bank of Nigeria. They've directed banks, payment service banks, and other financial institutions to immediately freeze all account assets and transactions linked to 6 individuals and 4 bureau de change operators designated for terrorism financing. The directive was contained in a circular that's dated June 24, 2026. In the circular, the CBN informed regulated entities of fresh sanctions issued by the Nigeria Sanctions Committee and the United States Department of Treasury's Office of Foreign Assets Control under Executive Order 13224 as amended. According to the Apex Bank, the latest update to the Nigeria sanction list, effective June 18, 2026, is binding on all regulated institutions and requires immediate implementation. And the volume of trade between Nigeria and the Philippines has surged by 700% in the last 3 years, rising from $47 million in 2023 to $300 million in 2025, as both countries move to deepen economic and diplomatic cooperation. This was disclosed by the Philippines ambassador to Nigeria, Marisol Melejoro, during the 128th Independence Anniversary celebration of the Republic of the Philippines, hosted by the country's embassy in Abuja. The envoy said that both nations had continued to maintain cordial relations while exploring new opportunities in trade, investment, education, and cultural exchanges. Nigeria and the Philippines established diplomatic and trade relations in August 1962 and have maintained bilateral ties for more than 6 decades. Nigeria operates an embassy in Manila, while the Philippines maintains an embassy in Abuja, which shows the long-standing partnership between the two countries. Outside Nigeria, now in South Africa, producer price inflation quickened for the 3rd month to 7.8% in May 2026, from from April's 4.8%, marking the steepest since April 2023. The increase was driven mainly by coke, petroleum, chemical, rubber, and plastic products, which surged 22.1% on higher fuel prices, including diesel, which surged 66.7%, and petrol, 28.1%. Other key contributors include paper and printed products, that's up 8.7%, food, beverages, and tobacco, 2.1%, metals, machinery, and equipment, 2.9%. On a monthly basis, the CPI advanced by 2.6% following a 3% surge in the previous month. And still looking at economies now, we head to Zimbabwe, where the Minister of Finance and Investment Promotion of Zimbabwe is planning to rebase the economy for a third time in less than a decade, 2 years before its target date of attaining upper middle income status. The move will reshape key economic indicators, which may distort whether the milestone is economically or statistically driven. Now, let's take a little bit of pause there and look at the Zimbabwe economy. We've seen a lot of improvement. They had a rebase last year, 2025. But let's start from where they are now. I'm talking about Zimbabwe's economy in 2026. Now, when we look at the number, we see that the GDP nominal value estimated at $56.71 billion. GDP growth forecast is 4.6% by the IMF and the World Bank, but the government of Zimbabwe believe that they can hit 8.5% GDP growth this year. Inflation has impressively gone down to around 4.4% in the first quarter and keeping full year estimate at 8%. Now, the situation started, or this good news started in 2025, and when they had that rebase, and we know we were not very expectant when they introduced the ZiG, the gold Zimbabwe, instead of the US dollar, which they were using in their country. So in 2025, we saw that nominal GDP value was at approximately $59.7 billion. GDP growth, about 8.3% growth. World Bank pegged it at about 7.5%. IMF estimated it at about 6%, and GDP per capita roughly about $3,000. Now, in 2024, this is where we really see the difference. So you want to compare those numbers. In 2024, we saw that the GDP value was $45.7 billion. Can you compare that to what they have now, which is about $56.7 billion from 45? Now they're at 56 in 2026, and the year is not over yet. So for 2024, their GDP growth was about 2%. Now we're talking about at least 4%, even though the government is saying they can do more than 8%. The IMF and World Bank agree on about more than 4%. That was what they were, and GDP per capita was 2,497, which of course is much, much higher than what we have now, after projecting about 8.5%. So perhaps Zimbabwe is not the same Zimbabwe we used to have before now, where their currency was not even in use. I mean, in Zimbabwe, they were using more of the US dollar. So some good things happening there in Zimbabwe. Now, in Egypt, let's move over to Egypt now, and we see that the Minister of Planning and Economic Development has said that the Egyptian economy recorded a growth rate of 5% during the third quarter of the fiscal year 2025-2026. compared with 4.8% in the corresponding quarter of the previous fiscal year, exceeding expectations that growth could slow to 4.6% because, of course, the war we're hoping has come to an end. The regional geopolitical tension, disruptions to global supply chains, and rising oil prices. So in spite of all of that, this is what we have for Egypt at this time. We see their nominal GDP is about $429.6 billion. Real GDP growth 4.2. IMF believes it to be about, okay, the government believes it to be 4.9 at the end of the year, but IMF says about 4.2. Well, it's close there, isn't it? Inflation has dropped, you know, and I think I forgot to mention inflation in Zimbabwe too. Massive drop we've seen there, just like Ghana did a couple of years ago, and they've maintained it. Now, inflation in Egypt has also dropped substantially from 38%, a peak that it had, to 13 in February and 14 in April. And this is in spite of the war, which affects Egypt a whole lot, being in North Africa. Foreign reserves, which is soared to 67.5. Nigeria is celebrating a growth of about 50, yeah? Well, they have 67.5 billion for their reserve. Budget deficits are narrowed cleanly to 5.2% of the GDP, down from 6%. So I think sometimes it's good for us to look outside Nigeria and see what other African countries are doing before we beat our chest and say we're the giants of Africa, because those countries, they are not sleeping. They're coming to overtake Nigeria if Nigeria doesn't sit up. Well, still in Egypt, the government there has decided to accelerate the adoption of electric vehicles to reduce dependence on petroleum imports and ease long-term pressures on its budget. In the 2024-2025 fiscal year, petroleum imports cost the country $21 billion. So EVs are practical measures to curb foreign currency outflows while modernizing the local transport sector. Several years ago, an ambitious local EV manufacturing plan was developed through partnerships with international producers, especially those in China. Well, that strategy has now acquired more urgency in the wake of the US-Israeli war against Iran and its impacts on global supply chains heavily dependent on petroleum imports from Gulf countries. Egypt suffered from Iran's closure of the Strait of Hormuz when oil imports dried up, raising the cost for both the states and consumers. And then we move away from that and we head to Kenya. So 2 years after that deadly Gen Z protest, we remember that, forced Kenyan government to withdraw a tax bill. Lawmakers have now approved another controversial package of financial measures. President William Ruto's administration says that it needed to raise $770 million ahead of the 2027 elections. And President Ruto has signed that Finance Bill 2026 into law, locking in a major overhaul of Kenya's tax filing calendar that will end the single June 30 deadline that most taxpayers have known for years. The president has signed to the bill and formally turning months of Treasury proposals into the Finance Act 2026. Under the new law, taxpayers will be grouped into 3 filing categories based on their tax status. Nil filers who have no taxable income must file their returns within 1 month after the end of their income year, setting their deadline for January 31. Individuals who are required to pay tax, including salaried employees, underpayee, and people with other sources of income, will now have until April 30 to file their returns. So this is the last day of the 4th month after the end of the tax year. So it's now tighter for individual taxpayers and even those who don't pay tax to file in, 1 month after their income year. Now, let's discuss a critical input for housing, not just in Nigeria, but also all over the world, and infrastructure development. The retail price of 50 kg bag of cement has risen to about 11,500, and that's up 9.5% from 10,500 a year ago, and roughly 36%. Will this trend continue? Let's speak to Tomiwa Ajewale. Tomiwa Ajewale is an analyst with Financial Derivatives Company. Hi, Tomiwa. Welcome to the program. Any hope of reduction or the change of trend in this increase in the price of cement?
Good afternoon. Thank you for having me. Yeah, we've seen an increase in the price of cement over the years, past 2-3 years, and even recently, last 1 year, 10%, as you said. To look at whether the prices are going to come down, of course, we have to look at the production cost of making cement, because that is the key factor for prices in Nigeria here. And if we look at the production cost, we have to start with the fact that cement manufacturing is energy intensive, and just look at the fact that the global economy is just recovering from a major energy price shock, which led to an increase in prices. So, over the past 2-3 months in Nigeria, also domestic diesel price went up about 100%. So some of the reasons that led to the recent increases we are seeing in cement prices. So now that energy prices are coming down, that is not going to totally lead to a significant reduction in price, but that might reduce prices a little bit. Another reason why we've seen prices a little bit high is the fact that cement demand in Nigeria appears to be relatively inelastic. So we've seen that despite the increase in the prices, demand has remained resilient because we are seeing the margins of manufacturers are remaining stable, and we are still seeing an increase in luxury buildings, high rise in urban centers in Nigeria. So we're seeing that the demand has been able to remain relatively stable. So the producers have been able to pass on the cost to consumers. So that's one of the reasons why we're seeing prices remain elevated.
And recently the federal government has called on manufacturers to reduce prices. Are there some things that perhaps have been put in place to lead to the expectation that prices may reduce?
Yes, so for prices to come down, as I said, we have to look at the production costs. If production costs are not coming down and the manufacturers are forced to reduce prices, that could impact their profitability, impact their investment plans, which in the long run will lead to reduced supply and, of course, higher prices. So we still have to go back to the production costs. As I earlier said, cement manufacturing is energy intensive. We look at Nigeria's energy sector, it's currently still not at the optimum capacity. So that is still in place. Recently, the exchange rate has been another major cost of production for cement manufacturers, but now that the exchange rate is stable, that is a plus on that side. And if also we are seeing some improvements with the federal government now we're seeing some improvements in the policies for the energy sector, which in the medium term could improve the energy supply. So those are the factors I would have to look at for cement prices to be able to actually come down through reduction in the cost of production. But if cost of production remain relatively high, there won't be any significant reduction in prices.
All right, Tomiwa, thank you so much for that.
Okay.
All right, let's take a break now. When we come back, we'll head to the market. Please stay with us. Welcome back. You're still watching Business Incorporated right here on Channels Television. Let's head to the markets now, where we see the continuous profit taking. They call it market correction, but this is really a long market correction that we are seeing, especially here in Nigeria. So we see that the NGX is still down at intraday today, 233,614.10, down 0.62%. After losing more than 3 trillion naira yesterday, the drop continues. For Johannesburg, it's also down 0.45%. Sorry, I beg your pardon. That's on the flip side, 0.45% in the green. Let's see other markets on the continent. EJX and NSE, that's Nairobi, they're negative at this time. And then let's head out of Africa and head to the Middle East and see what the numbers are looking at this time. If we could have that. Yeah, Dubai is red. Abu Dhabi is red, more than 1% down. Looking at other markets in the Middle East, let's see the Tadawul and Qatar are also down at this time. And then we go to Asia. Asia is mixed today. I wonder if the red is wearing off. But it's mixed today, so we see Nikkei is green. Kospi is very green, and we know that a lot has been happening with Kospi. We saw a 10% drop, and then it recovered and all of that, but it's green at the close of trade today. Hang Seng is down 1.43%, and then other markets, Shanghai and Nifty 50, are able to survive it, and so they are green at this time. And then we go to the United States and see the green color is the major thing. Let's find out what's going on in Europe, see if that green color is also spreading to Europe. We have Lars joining us. Hey, Lars, good afternoon. Welcome. So what's the color of the market now?
Hi, Ini, how you doing? It is green indeed. It's quite interesting when you look at those Asian markets, what a strong rebound they're seeing after those tech losses of the last couple of days. And we're seeing a very similar thing, just not quite as strong, but we are seeing all the major indices here in the plus. What I do not see, to be honest, any big moves, and that is obviously not a big surprise, actually, as whatever influences the market these days is, of course, still in uncertain territory. We're obviously still following that Iran situation, but we're also getting some economic data, and as so often, even when it's not entirely bad, it's also not good. In this particular case, we're getting a look at consumers, and we are hearing that, especially here in Germany, going into summer, or midst of summer, you could say, consumer optimism and expected consumer spending seem stable, albeit on the very, very low level that we've seen in recent months. So if you look at all the details here, it's not really something you want to celebrate.
All right, but staying with the market, we saw a rather steep drop in German defense shares yesterday, especially one of the largest firms in the sector, lost about 15%. What's going on?
Indeed, and that was Rheinmetall. You know, to look a little bit back here, Rheinmetall has seen quite a rise in recent years. As a matter of fact, it all started, of course, with Russia's war in Ukraine, when NATO countries saw the need to strengthen their military capabilities. EU member states significantly increased their defense budgets, and a lot of that money went to Rheinmetall, as this company based in Munich is one of the largest in the sector. Over these recent years now, business at Rheinmetall was brisk. The order backlog there reached over 60 billion euros. And that means, of course, they will be quite busy for years to come. Even their recent expansion won't allow them really to quickly work through all these orders that they have there. Add to that the fact, of course, that geopolitical tensions are worsening rather than improving. We're seeing that with Russia's war in Ukraine, but with other conflicts as well. Right now, Rheinmetall's orders include artillery ammunition, tactical military vehicles like tanks, but also very complex air and naval defense systems. And what happened now, they did lose an important contract, and that actually made these stocks yesterday drop by 15%. And it's actually so drastic for the company, I want to say, that stocks are even down today.
So why did they lose that? I mean, this is a big company. They should be able to secure big contracts such as this.
Yeah, but it was interesting how they lost it. It was all due to cost overruns here and delays. The Defense Department was just no longer willing to stomach. Here's what really happened. The Bundeswehr, that's the German military, had pledged 4 F-126 warships to NATO. They were scheduled to enter service starting in 2028. The first company that was actually contracted wasn't Rheinmetall. That was a Dutch shipyard called Damen Naval. However, they fell increasingly behind schedule. According to latest plans, the first ships there would have not been able to put to sea before 2032 at the earliest, and they would have been 4 years behind schedule. So the Ministry of Defense revoked that contract, gave it to Rheinmetall affiliate Naval Vessels Lürsen. However, at that point, 2.3 billion euros had already been spent, and now even more money would have been due, plus even more funds for another contract for some lighter frigates that the government had also placed with another firm. And the Secretary of Defense saw this cost explosion, and he now finally pulled the plug. He decided to go with only one type of ship, that lighter and cheaper one, and drop the massive Rheinmetall deal. So the government, NATO, they will still get their ships, but they will be a different type. They will come from another company, and they might not have all the capabilities that the originally planned vessels would have had, but they're still designed to hunt submarines and work air defense, and they will be good enough to do the job, at least according to the Defense Department.
Yeah, but I guess they still have to record that loss, unfortunately for them. But thank you so much, Lars, for giving us an update on that.
Thank you, Ini.
All right, let's head to the crypto space and see what the color is right there. Oh, God, I can't imagine Ethereum bleeding this much. 1,657. Wow. And BTC is also down 2.16%. And XRP, Solana, more of a red market now. The red color is affecting all the markets, including cryptocurrency. But some stories from the crypto space is that Nigeria has emerged as the largest market behind SFX Money apps, that's growing stablecoin payment network, accounting for about 60% of the platform's total transaction volume across the continent. So stablecoin, Nigerians are adopting it so much. And this is not the first, and I'm sure it won't be the last. Away from Nigeria, the Bank of England has revealed that it is reconsidering two of the more contentious aspects of its proposed stablecoin framework. Again, our crypto companies have complained that the proposed regulations would be too restrictive and would hold back the industry in the United Kingdom. Well, the Bank of England abandoned its highly controversial proposal to restrict individual retail wallets to £20,000 and corporate accounts to £10 million. And then Ripple's US dollar pegged stablecoin has officially launched in Japan, and following regulatory clearance from the Japan Financial Services Agency, the regulatory body designated RLUSD as an electronic payment instrument under Japan's payment. So stablecoin it's going, getting adoption from a lot of countries. Regulated, sometimes not so good, but bottom line is that adoption is growing, even here in Nigeria. Well, that's it for cryptocurrency and for the program Business Incorporated. We're glad that you have been with us. Remember, you can watch this program at any time on our YouTube channel. Business Morning, Business Incorporated. You can always get that feel again. I'm Amy John Mekwa. Bye-bye.